Hello and welcome to Pro Trader Strategies Market Commentary for Friday, June the 21st. My name's Eric Wilkinson. Yes, you may recognize me as the Wolfman from mainstream media, but I'm here to teach you guys some different option strategies you can implement into your portfolios, but please do that in your own way. And also remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data. Across the pond, we started getting their flash manufacturing numbers in the form of PMI, Purchasing Managers Index. This is a great number to look at for forward-looking guidance as to how the economy is going to be performing. So let's get on with it without further ado. We got the French Flash Services PMI coming in at 53.1, expected to be 51.6, so better than expected there. The manufacturing now out of French manufacturing PMI. Remember, we've seen a couple of these come in below 50. Last month's was above 50, and we got another one above 50 at 52. So we're not seeing consistent manufacturing PMIs, which is the ones I'm a little bit more concerned about, because those are the ones that are really going to affect like a recession or something like that. So anything below 50 is contraction, anything above 50 is expansion on these economic data points. And if you get three of them in a row that is below 50, that is looking like a recession. All right, so like I said, manufacturing out of France came in above expectations. Germany, though, they're the major manufacturing sector of the European region. It came in at 45.4, expected to be 44.6. But remember, that data point with it being 45 is below 50. That is, again, contraction. Despite the fact that it beat the number, it's still below 50, and we've seen that below 50 about the last 5 times, maybe even 6 times in a row. So they are clearly looking at a recession there in Germany. So, you know, that's another thing that the Fed is going to be looking at, is how the global economy is working, and if our rates are too high according to the global economic picture, then we might need to lower them in that regard as well. All right, so the German Flash Services PMI came in above 55, or came in above 50 at 55.6, and last month's number revised up slightly from 55 to 55.4. Then we got the Flash Manufacturing PMI for the rest of the European region. It came in at 47.8, expected to be 48 even. Again, this is the 5th time in a row that we've seen European region come in below 50, which is contraction, looking as it is a recession there. All right, and then Flash Services PMI 53.4, slightly higher than the 53 even that was expected, and they revised last month's number up. We also got our Flash Manufacturing PMIs, but remember, this isn't the one that we're really going to be looking at. We need to look at the one that comes in for ISM PMI, which is the Institute for Supply Management Purchasing Managers Index. That's our most important one, but we can take a look at this one anyway. Flash Manufacturing PMI came in above 50 just by a teeny, by 51.1. It came in slightly lower than expected there, and the Services PMI above 50 as well. Existing home sales better than expected at 5,340,000 units, expected to be 5,290,000 units. So 5,290,000 units. Sorry, I'm off. And then we got Bernard speaking as well. All right, off to the overall markets. We've got crude oil just slightly in positive territory by about 40 cents. You can see we talked about this, that we would probably look to go up and test the $58 a barrel, and as you can see right here, we got that. We could look at the high over here, just slightly off of that number right there. We came up and tested. It says it should be 58. I don't know why we're getting a 59 reading on that particular one there. It must have been where I left my cursor, but you can see there, 2 pennies shy of $58 a barrel, and we talked about that. That was going to be a major resistance area right there at $58 a barrel, because we saw it acting as support, and it lines up with that Fibonacci extension that I have put in there. So all of those things in line, and as the closer we get to 60, we're going to start seeing some overhead resistance. I think that this big move to the upside is overdone, and we're going to be probably looking to roll over next week. Okay, so then let's move on to gold futures. These guys cannot break away or break to the downside. It is all upside move. The 1400 handle coming in today. You can see there we're trading as a high right now of 1401, the high being 1415. I did not expect this move to the upside. As you can see, I was short GDXJ. It's not that bad right now because of the theta decay and everything else. We got some volatility coming out, but I need a move to the downside, and hopefully we'll start getting that next week with this blast off. It just seems like the steam blew off the top and may want to start rolling over here. Like the bonds blasted off to the upside, kind of really over celebrating a Fed cut. They were really looking for probably more than what the Fed was even kind of talking about. Like they weren't even sure. Like we talked about, it was a split vote. They are saying that there is the possibility down the road, but we're seeing our economic data points come in above 50 on these PMI numbers, and that's not showing recession. So that would be the real catalyst to start cutting those rates. So I'm not seeing that right now, and therefore I think the bonds are also starting to see that the cuts priced in maybe a little bit too many times. All right, we got the VIX still in the teens, which is nice. Dow Jones Industrial Average up 65 points, about half off the highs of the day. Something I want to talk about here is in the actually in the E-mini S&Ps. E-mini S&Ps, we printed those overnight highs. This high right here of 78, 79 and a half, that is in the overnight session. So we don't really take that into account. It's going to want to be priced during the overnight. That's the overnight high. So we need to print that during the day session, that 78, 79 and a half, before the market really feels good about that pricing. All right, well, with the E-mini S&Ps, this is what I wanted to mention. This happened during the day session, the 29.69. If you guys remember, this was the previous high, which was 29.61 and a quarter. That high was printed overnight. So I talked about this time and time again, that the day session wants to come in and print those highs during the day, which is what we saw happen with the E-mini S&Ps. You can see during the day session, we were able to go up and print those historical highs. Now we could easily start to see this market roll over. Now that that target is behind us, we could see the market start to come off. The market is still trying to celebrate the Fed and trying to signal to the Fed that we need a rate cut. And once they got that little inch, they're trying to take a foot by making this rally and say, hey, you guys talked about it. We're celebrating it. And then we're going to start moving high to all-time historical highs, as we're seeing here in the mini S&Ps. And that's about it. I haven't done anything with my portfolio. I'm just letting it sit right now, waiting for this market. Yes, we've kind of blown off to the upside. I've been tested on these, but I'm still staying with the probabilities that the market's going to come back, and my probabilities are going to work out for my strategies. And that's about it. I'm going to wait for at least Monday maybe to make any other decisions. But as of right now, I'm in a holding pattern. So have a great weekend. Check out my webinars on directional assumptions. Yes, we always have our directional assumptions where we decide, you know what, I'm bullish in this or I'm bearish in this. Well, I'm going to show you how you can take that assumption from conception and build out a strategy that is most appropriate for that assumption and the environment around that underlying. Every underlying is created differently, and I talk to you guys about how you can figure out those differences and what those differences mean for you. All right, so check that out at ProTraderStrategies.com, and if you can't take that, take it easy.